What is up? And welcome back to another super exciting episode of How to Invest.
What's up? I mean, it's been probably at least 2 or 3 weeks.
Yeah, it seems like it.
You guys have been busy.
We traveled a couple Thursdays. We went down to look at the property in Palm Beach.
We did some suffering in Palm Springs.
And then the other, outside of the country, Palm Springs, did the Cactus to Clouds hike. This is our first podcast since then. Don't recommend it. Yeah. It was really hard.
Your knee's still hurting?
Actually, it just stopped hurting.
So it took
2 weeks.
2 weeks.
2 weeks. Yeah.
Yeah.
Several $100s at the chiropractor.
Yeah, we'll have Aaron put a link to the Cactus to Clouds hike that we did, but it took us about 16, 17 hours. Started at 3:15 in the morning. We ended like 7 or 8 at night. Headlamps on both sides of that.
You're using we pretty generously over there.
Yeah.
That's a liberal we got.
Yeah, well, not all of us did the whole thing. I mean, some of us didn't do all of it, but they were injured, so we'll let them off the hook.
Yeah.
All right, Braden, we got some updates.
We just bought a shopping center in Midwest City. It's literally just outside of downtown Oklahoma City.
Yeah, an hour and a half from here?
Yeah.
10 minutes outside of downtown, 20?
10 minutes outside of downtown. Super close. Super excited about that. Property is anchored by an Ollie's. We've got a Dollar Tree. We've got 3 or 4 out parcels.
Chase Bank, Mazzio's.
Yeah.
Old KFC.
Yeah, in a good location. It's on a big corner, tons of traffic, growing area. So I think we'll do really well there. It starts, we bought it really good. It starts off with great cash flow. It's 100% occupied. So I think we'll spin off some of these pads, and then I think we'll just enjoy the cash flow at a reduced basis from there.
Yeah, should sell that KFC pretty quickly.
Yeah, we're already negotiating.
Yeah. Good.
And then what else? Sales. We sold the Payway Kava building in Owasso. Investors got their money back on that. That was exciting. We're about to exit out of the deal next to that, the Taco Casa Pickleman's building. The Taco Casa closes December 2nd.
Yeah, I think it's next month.
So like a week or two. We're definitely going to get those funds out to investors this year.
Aspen Dental might sell.
Aspen Dental might sell this year. It may push to January, but it's looking promising.
Yep.
The returns on that, guys, if you're in the Aspen Dental, good pick.
Yeah, almost 50%.
Yeah, it's a great return. We funded that this year. It's already done. Tenants almost open. Very strong credit profile with the Aspen Dental. So, yeah, excited about that. I think that's all the sales we'll see this year.
Probably. The TLE's under contract, but I don't think that's going to close this year.
Yeah, the Grand Prairie TLE is under contract. Looking at possibly switching brokers on the Burleson TLE. I think that one's run its course. And then a lot going on in Slidell. I think we may sell the Goodwill. Looks like we're parceling that out of the shopping center and selling it. Take 5 is well under construction. We're going to list that at the end of this year. O'Reilly's is almost through their due diligence period. So, again, another pad site sale.
Yeah, it's finally good to see starting to move some of these deals and getting investors their money back plus the returns.
Yep.
We got a couple of deals coming up real quick that we're going to be launching in next, couple weeks?
One may go out next week after Thanksgiving. That deal in West Palm Beach, Florida. Decent renovation on that one. Well located, not so great looking center. We're going to go in and
fix it up.
Need some work.
Yeah. The renderings look nice. I think if we can get, that, which we've started to get budgets on, it looks good. I think it's a good deal. And then, there's no vacant real estate in West Palm Beach, Florida. There's very few pieces of land, so good infill location there. And then another one in Houston.
All right, so a couple other updates before we get into today's topic. If you're not watching OU football, you should be. It's way better than OSU football. And if we win next week, we got a guaranteed playoff spot.
Yep. Defending Bedlam champion still, Oklahoma State. But
forever.
Oklahoma who?
Yeah, they'll have that forever. Another one, Oklahoma City Thunder, best team on the planet. Still, I think they're 17 or 18-1. If you're not watching them, you should. And the
still
last,
breaking records.
Oh yeah. Still, the last thing is you should never listen to me on crypto advice, as Braden has said many, many times.
Yeah, we learned that long time ago.
It looks like that my prediction is going to be an epic fail.
Yeah. When Joel says buy, you sell. When Joel says sell, you buy.
But only when we're talking about crypto, not about real estate.
Well, you had some prediction, though, that I saw where it was like y'all played it back and you were right about something.
Yeah, like OSU.
About something.
Mike Gundy getting fired. Yeah, so I got a little high, on my ability to prognosticate, and then I, burn in flames when it comes to crypto.
Hey, man.
Today's topic, though, is Hey, a little bit about a prediction. We're going to try to predict the future, but we're looking at inflation data. And I think one of the biggest things that has come to for me to realize when I started in real estate, it was always this, is it going to go up? Is it going to go down? You know, did I buy right? Is this house going to be worth more tomorrow, or am I going to lose money on it? And we've been doing this now 25 years, and what has become apparent to me is that assets go up. Not for any inherent reason other than the dollar is going down in value. And so we wanted to kind of explore that today and make sure that you guys appreciate how important it is to have your money invested in assets that are going up in value. Otherwise, you're really getting behind the eight ball when it comes to inflation and losing wealth. So what are you guys' thoughts? Braden?
I mean, cash is nice, but in the scheme of wealth, cash is kind of trash. You know, you have to allocate some amount of your portfolio to it, but I think fear keeps cash in a lot of people's hands. I know cash is nice to have. You don't know what's coming, but the more predictable you can make your life, you know, and know what's coming, you know how much cash you need, you know, generally speaking. And then from there, it's just about leaning in, man. But you can't hoard cash, like $1 million in cash or hundreds of thousands in cash. Like, unless you're earmarking some big acquisition, we need to get that in the market. We need to get that appreciating. I mean,
Cash in a savings account just isn't going to keep up.
No.
So we got my brother-in-law Brent on. I'm going to ask him a question. So just to kind of get his thoughts, and then we're going to get into some numbers. So you've obviously done some retirement type thoughts, right? Mm-hmm. Hey, you know, how much would I want to have when I retire, or how much money do I want to make in retirement? How did you come to that number, and did you take into account the inflation that you're going to see over the next 30 years?
No, to the second question. And it's funny I'll say this. My wife asked me when I was getting dressed today, because I just did a big career change, was in a consistent job for 15 years, consistent paycheck for 15 years, started my own company, started another company after it outgrew the first one, basically, is what has happened. And all that to say, financially, for the first time in our lives these last 2 years, it has been the money only comes when I go make it. And if I don't, it's not. It's just this more volatile lifestyle that we're living. To my wife, for me, when you're in the driver's seat, it's way easier to make, the decisions and to feel confident. But for her, this morning, she says, hey, are we putting money in a savings account? That literally came out of her mouth this morning.
Okay.
And it's funny because our two philosophies on money are so different. To me, a savings, I don't remember the last time I said savings account, because I probably can't make a real logical argument. I probably could if I took some time, but I just know that's not where I want money. I don't want it sitting. No number, just make a lot and make it by doing a little.
Okay.
That's kind of make more than I need.
Well, Brian, we were traditional workforce guys. And so I think a lot of people that watch or listen to the podcast might also be working professionals.
Traditional workforce, is that like a new age term
I
for saying
just made
old?
it up, actually.
We're old.
They're not traditional, and we are.
Yeah.
But all the guys, right? They had a number. Like they were planning on retiring at 65, and they said, hey, I want to have $3 million. And I'm just wondering, I don't think most people think, what is that $3 million going to be able to buy in 30 years? They just think today, $3 million works for what I think I want. Today it works. So I'm just going to save to get to that number.
That's right. Yeah.
And so
I agree with that.
You've got some numbers written down, and that's kind of the point of what we're doing here is I want to make it real for you guys on how much that number that you have in your head is going to be worth 20, 30, 40 years down the line. So let's just do the first one. I'm 47, okay? And so you could argue that some people start work around 20 and they end around 67, let's say, just for this example. So that's 47 years, okay? So $1 the day I was born, what is it, what do I need to have today to have the same purchasing power as that $1?
Well, it's worth 20 cents. So you need $5 today from the dollar that you were born.
$5. So let's say I was saving to $5 million in retirement, when I was 22 or 20, and I get to retirement and I have $5 million in the bank, but it can only buy me $1 million of stuff. Yeah. That is devastating.
It buys you $5 million worth of stuff, all right. It just doesn't look like it.
Yeah, it's just a lot less. I mean, to me, I don't know that people really appreciate that over their working career, they're losing they have to have 5 times as much money as they think they did when they started.
Yeah, I agree with your statement before where people say, okay, I'm 30. Let's see, I bet you I can make it on $3 million. And then when they get to $3 million, 30 years later, it's not worth near as much.
30 years later, they live in a $3 million house.
Yeah.
Right?
They do. Yeah, because it's not worth as much.
Yep. Yeah, it's so important, because I think that's the silent killer. Inflation is the silent killer in our economy, is that people are saving to a number that they think is going to give them a certain lifestyle that, let's say, the $5 million when they started out was going to give them. I can buy this house and we can have a lake house and I can have a boat. And then they don't really think about it for 40, 45 years. And then they get to retirement and they're like, I can't afford that life that I had in my head all these years that I was working towards. Why can't I have it? Why does it seem like I can't get it? And it's because it's worth literally a fifth of what they think it's worth.
So we've got an example coming up, the gold one. I think that would be an interesting one to pop to, because I think it's relatable in terms of, somebody dying. Let's say your grandma just died. You maybe got this gold, necklace or gold bracelet or something. Grandma bought it for like a couple $100s. Today it's worth thousands and thousands and thousands of dollars, right? That's an example of the appreciation we're talking about. But I think on a large scale, you're doing it in other assets other than just gold, other than a just gold bracelet, right? Hopefully you're buying shares of companies, you're buying precious things, you're buying real estate, any and all of the asset classes, you're using that cash to make a good deal on an asset that is going to continue to appreciate. And there's so many of those assets, so many.
Yeah.
So we should have done gold back to my birthday, but we didn't. But we did it to 2000.
Right.
And so a dollar of gold in 2000 is worth you would need how much today to be able to buy the same dollar of gold?
Well, it's increased by 168%. Gold has since 2020 to today. It's gone up 168%.
Okay, so you need
$2.68.
Okay. So that's really good. I mean, that's really strong growth over the 25 years. Mm-hmm. Okay, and then we did a couple other things. We did the S&P.
Yeah, the S&P has gone up since January 2000, 361%. So
the 500 biggest publicly traded companies in the United States went up 361% in the past 25 years. That's what I'm talking about, right? Yep. That's huge. If you don't own shares of Apple, then just stop. Buy shares instead of buying $1,000 phone, buy $1,000 worth of Apple stock, and then that will buy you the rest of the phones. Right? Like when I get an email, I'm serious.
$1,000 phone.
Yeah.
Why didn't I come sooner?
When you guys have Netflix, right? When I get the email from Netflix that says, "Hey, we're going up $1 or $2 a month," I know they have hundreds of millions of subscribers. They send an email, and then boom, next month they get an extra $250 million in reoccurring monthly revenue. If you're not buying the stock when that happens, what are you doing, right? Like Netflix stock has gone up like insane. This is what I'm talking about.
Now, I would say, and this is not financial advice because we already learned that you shouldn't take it from me. Yeah. But the stock market is at an all-time high. It's been setting all-time high records the last couple of years. We've been on a run since 2009. Yeah. So we're not suggesting that you should go quickly dump all your money in the stock market at the very top, because I think there's going to be a correction. Once again, don't listen to me. So you should, if anything, dollar cost average over time into the market, because there will be a correction. And when it goes down by 30, 40% sometime, that's when you really want to focus, buying big chunks of it.
But look at COVID. Like that correction was short and fast. It almost wasn't even a correction.
Very short.
So if anything, there's a lot of
speculation.
Speculation. There we go. See, that's why you can't listen to me on financial advice. On how these corrections are becoming shorter and faster, right? Yeah, because of everything we can do to kind of artificially prop the economy up. Yep. That's what's happening.
And I'll tell you what one of those things is, and it's printing money. Yeah, right. It's the quantitative easing that the Feds do, which is a inflation driver, or at least an asset class improver. So. Yeah.
I saw this video the other day, and it was about how generational wealth invests for generations, right? And it's the idea that when you can buy something, a good asset for a deal, it's like, man, it's 20% off. It's like embrace the old lady at JCPenney. It's like, oh, it's 20% off. I'll get it. It's the same thing with assets. These short, fast corrections, we know it's going to go back up. Yeah.
But hopefully you didn't invest in JCPenney's.
Yeah, hopefully you didn't do that. Yeah, not a bad idea. Anyway, you got to take advantage of these things because that's one big common theme of generational wealth. They lean in these moments of pulling back, you know?
Yeah. And okay, so we've given you other asset classes. Obviously we're big real estate guys because we're consistently getting our investors 50, 20, and even 25% average compounded returns in deals. And so, you know, have we had a few that we've never lost anybody's money, but we've had a few that have underperformed, but the majority meet or overperform. And, you know, the rate of your return matters, guys. I mean, there's only two things that matter. It's the amount of time that your money is invested and the rate of return. There's nothing else. And if you change either one of those metrics, your returns skyrocket. So, you know, I think the last point I think we were going to make was the dollar, you need about 3% average annual compounded growth just to keep up with the loss of value on the dollar or inflation. And that has been the last 25 years. And you can argue that it's been artificially low because we went into a correction at the beginning of the 2000s. And then we had a massive crash in 2008. And so that kept inflation really low, flat, and almost maybe even negative several years. So I don't know. I don't know that 3% covers you the next 25 years. You may need 4% or 5% just to keep baseline purchasing power.
When you think about the S&P, I mean, over the past 30, 35 years, it's averaged like 9%, big round number, right? When you look at cash, it's averaging like negative 3% per year. So you can make 9 or you can lose 3. And people are like, well, I don't want to risk my money. So like, what?
Yeah.
What are we talking about, guys?
It's a risk to not have it invested in something that goes up in value.
Yeah, that's the risk. Yeah.
Or the bigger risk is taking your hard-earned money and buying not assets but liabilities, buying things that lose value, like everybody has to do, but spending it on cars and boats and things like that are just never going to appreciate. So, all right, any other thoughts, Brent? Any thoughts?
One thought. What is obviously the assets I've heard are homes, precious things, which I don't know what that means, and gold. Anything, I guess if you're talking to my wife and she's like, do we have money in a savings account? I'd be curious how you guys would respond to that. You know, even from just when y'all talk, it's above my head.
Right now, a savings account's going to earn you 3% most likely, maybe 4% if you had it, but probably 3%.
Y'all don't have savings accounts, like is what I'm.
Well, the cash we have that we need to keep in business accounts, we try to keep a good chunk of that in a called a money market account or a savings account that pays a rate of return, 3%. Right now, that happens to equal inflation, but it doesn't always and rarely does equal inflation. Right. So I would say, yes, the first step is to getting money in a savings account that's earning some interest, but then you need to be putting it into asset classes like stocks, there's bonds, there's precious metals, there's real estate.
Outside of 25 grand in like an emergency fund, like let's call it something other than a savings account because we don't want to save. Like what's your biggest exposure? Your HVAC going out, your roof going out, your car going out, maybe 2 of those combined, save that amount of money, the rest shove in a 401k, IRA.
But the guy who's making like $500 over the top of his, like, what's he doing?
Robinhood.
Huh?
Robinhood. I mean, buy a fractional share of Netflix, buy $20 worth of Netflix, you know, like $20 compounds the same percentage as large amounts of money. You have to develop the behavior. And that way, when you get large amounts of money, like let's say a tax return and you don't need it, then you're doing that same thing. You've developed the behavior, you start to buy assets.
Now, last point here, I just think it's interesting. Somebody that's making $500 more than their expenses or something. So that's not a lot. I definitely think they need to be saving, but the real focus of that person should be to be increasing their income.
Yeah.
And if they're saying, hey, I make $200,000 a year and I'm still only $500 above my expenses, well, then they need to focus all their effort on lowering their expenses. Yeah. And so, you know, you have to be drastic about your situation if you want to change your future. And you can't just settle and say, well, this is my job and this is how much money I spend. I only have 100 left over. No, change something, right? Do something in your expenses to keep $300 a month or $800 a month. How do I make more money? Focus. Do I need to be more educated? Do I need to, show up more? Do I need to change careers? I don't know what the answer is for any given person, but you have to get serious about your future, and saving money and investing in assets today is the best way to do that.
Yeah, and I think to that point, what really changes things is a large sum of money, like $5,000-$10,000 at one time, to where you can actually start something, do something, affect change, start a business, buy the piece of equipment, whatever it is. I think the natural progression is a side hustle, right? A side business. For me, it was like a real estate
OnlyFans account.
Yeah.
Oh yeah, that's where I've seen you.
Yeah. That's it. That's why I grew out the hair.
You sell your toenails, don't you?
Yeah. He's finding that the longer the hair is, the more he makes on OnlyFans. I'm not saying what I'm saying, but
bottling it up and sending it out.
Yeah, you'll never guess my username though, so don't even try. Anyway.
All right. Well, hopefully that was entertaining for you guys today. Glad to get this episode out, and we will talk to you next time on how to make lots of money in commercial real estate.
Happy Thanksgiving. Happy Thanksgiving.
We should say that. Happy Thanksgiving. Yeah. Spend time with your family.
It's the week of Thanksgiving.
Except that this is going to air after Thanksgiving.
Well, we can cut that clip out and say Happy Thanksgiving.
Say Merry Christmas.
All right. Good job.